With inflationary pressures high and consumer shopping patterns shifting, we wanted to highlight primary economic indicators and how they're impacting us with our second industry update. So, as you know, the macroeconomic environment is rapidly changing and it's becoming more important now than ever for companies and emerging brands to pay attention to what's happening. But understanding economic trends is not always easy, so that's where we come in. I'm Lauren Ramsey, Sales Operations Analyst here at Chomps, and I'll be walking you through these trends.
And I'm Claire Zerchowski. I lead our sales strategy here at Chomps. Lauren, thanks for introducing and walking through the 5 main primary economic indicators last month. We'll continue to track those and report on those each month. For this month, we're going to walk through the key headlines. To kick off, Lauren, can you walk me through CPI? What are the key headlines in August?
So CPI, which is the Consumer Price Index, it's a broad inflationary indicator, dropped this month from 8.5% to 8.3%, while it rose on a month-to-month basis. While this decrease may seem like a positive sign, the decline was actually significantly less than anticipated. When this report was first released last week, the stock market actually had a pretty harsh reaction, with the S&P 500 falling to the lowest level since the pandemic period in 2020.
Lauren, you mentioned discretionary decreases were less than anticipated. Can you walk us through why we were expecting a larger decline?
Yeah, so over the last year, you probably felt it, but the Federal Reserve has enacted a series of interest rate hikes in an effort to combat inflation. The idea of these hikes is that as the interest rate moves higher, demand will move lower. It's also in an effort to moderate borrowing and wage growth. However, this month's CPI report shows that we have yet to see the impact of those hikes on inflationary pressures in the economy. In response, the Fed will likely continue to increase interest rates for the next year. Another important call out is that gas prices dropped 5% last month, but even with this decline, we're still seeing rapid price pressures. The increase in costs for rent, food, and medical costs was enough to offset the decline in fuel prices and demonstrates that inflation remains a very prominent issue.
Lauren, I'm definitely feeling the interest rate increases. I'm in the market for buying a home, so I definitely feel that and don't like to hear that they're going to continue to rise over the next year. You mentioned food at home, right? Here at Chomps, it's really important to stay close to food at home and grocery costs that have played such a huge role in the consumer price index. How are those food prices continuing to play a factor in inflation today?
So, the interesting thing about food prices is they've always been one of those more volatile indicators in the CPI inflationary reading. For that reason, food and gasoline are frequently removed from the indicator to create the core CPI reading. And this gives you just a better picture of price pressures in general. So when you remove food and gas, you see that inflation is still on the rise versus the decrease we saw from the CPI measure. However, looking at this graph we have displayed, it's easy to see that food at home has not been a rapidly volatile changing measure recently. Instead, it's been quite the opposite, and it's been increasing really since the beginning of 2021. In August, food prices rose 1.1% from last month and a staggering 13.5% from last year. This marks another record increase since May 1979. And on the one side, meat prices are making up a significant aspect of that number, rising at 6.7% year to year.
Thanks, Lauren. That makes a ton of sense because we're really feeling this in the CPG space today. Grocery prices continue to remain elevated. We're seeing, grocery prices increase over 14%, actually led by snacking brands whose prices are up just under 17% year over year. Today we are all challenged with the rising COGS and rising category costs, but keeping your consumer top of mind is critical to maintain loyalty and share of trips, which we're all challenged with given these inflationary pressures in the food space. All consumers are feeling these changes, so as a brand, being transparent about these challenges and being upfront with your customer is going to continue to be critical. So Lauren, what about PPI? What are the key callouts there?
So the PPI, or the Producer Price Index, shows us kind of a more positive note. It actually has fallen from last month and is slowly beginning to edge closer to that CPI reading. Specifically, the headline PPI rose by 8.7% in August in comparison to the 9.8% incline we saw last month. This marks the second consecutive decline in wholesale prices, and it may be an indicator that this drop simply needs more time to be reflected into those consumer prices. This reading is a good indicator to look at for broader economic trends that will eventually be reflected on the store level. But on the one hand, an 8.7% yearly price increase is still drastic and can indicate warning signs of a recessionary period, which is in line with the GDP report from last month.
Okay, Lauren, I've heard some positives, I've heard some challenges. How is this impacting consumer confidence over the past couple of months?
So this month, we actually saw consumer confidence released by the Conference Board beginning to rise, which mirrored the preliminary consumer sentiment reading that we reflected on last month. However, that confidence index was released prior to this month's inflationary report. So expectations for prices to drop more than they did may have fueled some of this optimistic response. There is an interesting argument that consumer sentiment has more of a drive to the economy than we think. With this logic, the idea that we're seeing more optimism may be a good sign that conditions are on the start to beginning to improve.
That's interesting, Lauren. Help me understand that a little more. What are some reasons that inflation conditions may begin to decline?
Yeah, so historically, used car prices have been a really good key indicator of inflation, and we are starting to see that metric beginning to fall. We've also seen continued supply chain improvements with new orders and on time deliveries increasing. Materials availability and overall inventory is on the rise. While wholesale prices remain high, they have dropped from prior months. As emphasized earlier, it may just take a bit to see that impact really reflected within consumer prices.
Makes sense. Thanks, Lauren. Another new development that we should definitely touch on from the last week was the potential railway strike. Last Thursday, after over 20 hours of deliberation, a tentative 5-year deal was reached, averting a strike. Now, for this deal to pass, all 12 rail unions must sign and agree on the deal. What would be the potential consequences if this agreement fails to be ratified?
Yeah, so a railway strike would completely shut down the U.S. railroad system. According to the Association of American Railroads, railways currently carry about a third of U.S. freight, and a strike could cost up to $2 billion a day. There's also hundreds of thousands of barrels of crude oil that are shipped by rail every day, which means a strike could ultimately create gasoline and diesel shortages. Trains also carry the majority of livestock feed shipments that are critical for U.S. agricultural development. The bottom line is, even if a company is not primarily shipping via railway, the impact would be substantial to our economy.
Makes sense. At Chomps, we don't use railway that often, but it's going to create a ton of competition with the freight options that we currently use. Again, thank you, Lauren, for deep diving into the key economic headlines this month. For our listeners, what should they take away from this economic update?
All in all, inflationary pressures remain high, so we can expect a series of upcoming interest rates despite wholesale prices beginning to drop.
Tune in next month as we break down the most important and relevant economic trends to the CPG industry. Thanks, everyone.
Thank you.